The allure of gold is timeless, and its value is as elusive as it is coveted. As the world's most sought-after precious metal, gold has long been a subject of fascination and speculation. But have you ever stopped to think about why its price seems to dance on the whims of the market? Or why, in recent years, more and more people are turning to gold as a safe haven for their investments? Let's dig into the world of gold and uncover the simple reasons behind its fluctuating value. 1. Historical trends. The price of gold has been on a remarkable journey over time, with significant peaks aligning with economic downturns, low interest rates, and falling stock markets. This trend is not surprising, as gold is often seen as a safe haven asset during times of economic uncertainty. The current economic slowdown and recent stock market drop, which saw the Dow Jones Industrial Average plummet by 1,190 points, have led many to expect a surge in gold prices. However, the unexpected twist is that gold has hit a historic high despite the U.S. economy performing relatively well. The sudden and dramatic increase in gold prices has left many investors perplexed. Some have described it as crazy, curious, stealthy, and mysterious. The question on everyone's mind is what is driving this unusual rally. One possible explanation is that investors are seeking a safe haven from the uncertainty and volatility in the global economy. Another theory is that the low interest rates and quantitative easing policies implemented by central banks have led to a surge in gold demand. The mystery surrounding the gold rally is further complicated by the fact that the U.S. economy is not experiencing a recession. This has led some to speculate that the rally may be driven by factors beyond traditional economic indicators. Whatever the reason, the surge in gold prices is a significant event that is likely to have far-reaching implications for investors and the global economy. 2. Ways to invest in gold. When it comes to investing in gold, there are two primary methods to consider: exchange-traded funds, ETFs, and physical gold. ETFs are essentially shares of gold that can be easily bought and sold on the market, much like stocks. This makes them a convenient option for those who want to invest in gold without the need to physically store it. On the other hand, physical gold includes items like gold bars, coins, and jewelry, which require storage and handling. In recent times, there has been a noticeable shift in investor behavior. Many people are choosing to sell off their ETFs and instead invest in physical gold. This trend suggests that investors are seeking a more tangible and secure way to hold their gold assets. Physical gold provides a sense of control and security, as investors can directly possess and store their gold. This shift away from ETFs and towards physical gold may be driven by a desire for greater control and a more direct connection to the gold they own. The shift towards physical gold also highlights the importance of understanding the differences between these two investment methods. While ETFs offer ease and convenience, physical gold provides a sense of security and control. As investors make their choices, it is essential to consider their individual needs and goals. By doing so, they can make informed decisions about which method best suits their investment strategy and risk tolerance. 3. Central banks and gold. The trend of central banks stockpiling gold bars began as a response to the Ukraine-Russia war. As a way to safeguard their assets, central banks around the world started buying gold at an unprecedented rate. This surge in demand nearly doubled the amount of gold being purchased by central banks, signaling a significant shift in their investment strategies. The primary concern driving this trend was the fear of asset freezes. Following the U.S. and its allies' decision to freeze Russian assets, countries like China and Turkey became anxious about the potential for their own assets to be frozen. In response, they turned to gold as a safe haven asset that could protect their wealth. Unlike other assets, gold is not tied to any specific country, making it a more stable and secure choice. Gold's unique characteristics also contribute to its appeal. It is a rare and highly valued metal that cannot be manipulated or devalued by any single entity. Its value is determined by market forces, ensuring that it retains its worth regardless of economic or political fluctuations. As a result, gold has become an attractive option for central banks seeking to diversify their portfolios and safeguard their assets from potential risks. 4. Individual investors. As central banks and individual investors alike continue to buy gold, a significant shift is taking place in the global financial landscape. In China, young investors are particularly drawn to smaller gold items, such as gold pins, which are more affordable than full gold bars. This trend is not limited to China, as younger generations worldwide are becoming increasingly skeptical of traditional financial assets and are seeking alternative investment options. This growing interest in gold is not limited to China. A Gallup poll conducted in 2023 revealed that Americans now prefer gold over stocks for long-term investments. This shift highlights the changing attitudes towards financial assets and the growing desire for diversification and security. As central banks and individual investors alike continue to buy gold, it is clear that this trend is here to stay. The appeal of gold lies in its perceived value as a store of wealth and a hedge against economic uncertainty. Its value is not tied to the performance of any particular company or market, making it a more stable investment option. As investors seek to protect their wealth and navigate the complexities of the global financial system, gold is emerging as a popular choice for those looking for a safe and reliable investment. 5. The Costco Effect. One surprising place that is showing this trend is Costco. They started selling gold bars online and in-store in 2023. This move by the retail giant has caught many by surprise, but it seems to be paying off. The trust that customers have in Costco is translating into a significant demand for gold bars. Suppose a customer bought gold at Costco, and it sold out quickly. This customer's experience is not an isolated incident. Many others are also flocking to Costco to purchase gold bars. The convenience and reliability that Costco offers are making it an attractive option for those looking to invest in gold. People trust Costco, and they're spending an estimated $200 million on gold bars each month. This is a staggering amount, and it highlights the growing trend of people investing in gold. Costco's entry into the gold market has certainly made it more accessible to a wider audience, and it will be interesting to see how this trend continues to evolve in the future. 6. Global uncertainty. The sudden surge in interest in gold is not just a reaction to the current economic climate, but also a reflection of deep-seated fears about the future. According to analysts, the world is facing a multitude of challenges that are driving investors towards the safety and stability of gold. COVID-19 pandemic, the ongoing conflict between Ukraine and Russia, and the persistent unrest in the Middle East have all contributed to a sense of uncertainty and unease. Furthermore, the growing burden of government debt and the increasing political instability in many countries are also fueling concerns about the long-term health of the global economy. As a result, investors are seeking safe haven assets like gold to protect their wealth and mitigate potential losses. This trend is not limited to any one region, as the global nature of these challenges has led to a widespread desire for security and stability. In China, the interest in gold is particularly pronounced due to the recent stock market crash and the struggles faced by the housing market. For many years, real estate was seen as a safe and lucrative investment opportunity in China, but with the market now in decline, investors are looking for alternative options. Gold, with its historical reputation as a store of value, has become an attractive alternative for those seeking to diversify their portfolios and protect their wealth. So, what does all this mean for investors? Gold prices can still fluctuate, often driven by emotion. But many analysts are optimistic about its future value. Thanks for watching. If you found this video helpful, give it a thumbs up and subscribe for more insights. See you next time.